Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Oil gains for a fourth day after OPEC Plus agrees to hold off on hiking output from January. This as the producer group faces the prospect of ballooning oversupply. The White House says China will suspend some rare earth curbs and halt probes into US chip firms as trade tensions continue to ease. Plus, earnings crossing the terminal from Europe's largest budget airline. We will be joined by the CEO of Ryanair, Michael O'Leary, later this hour. The earnings dropping right now for Ryanair. Second quarter profit after tax coming in at a solid beat, 1.72 billion euros. The estimates have been for 1.67 billion euros. Revenues in the second quarter coming in slightly higher than the estimates, 5.48 billion euros. The estimates had been for 5.45 billion. Again, profit after tax, it's a beat for Ryanair, 1.72 billion euros. The load factor in the first half coming in line with estimates, 95% is the load factor in the first half. And Ryanair sees full-year customers, the numbers at 207 million. They had seen 206 million, so that's above their previous guidance on customer numbers for the full year. The stock is up just shy of 40% year to date. In terms of an interim dividend, that is also coming through, 0.2 euros per share in the second quarter. But these are first half numbers, and we'll get more details and a response from the CEO of Ryanair, Michael O'Leary, joining me in the studio. That interview at 6:40 UK time. We'll be talking about those Boeing deliveries, of course, and how they are thinking about routes around Europe as they cut some routes to countries like Germany and Spain. Let's get to the broader markets right now. Earnings is certainly part of the optimism that you're seeing percolating through the equity markets. Yes, you had losses of around 0.5% by the close on Friday in Europe, but futures are pointing higher, as you can see, up 0.2% on the earnings story, on a further improvement in terms of US-China relations, with the news out over the weekend, at least from the White House, saying that China will be easing further curbs and probes, of course, of US chip firms. FTSE 100 futures pointing to gains of 21 points. It's the BOE decision day, of course, on Thursday. S&P E-mini stateside looking to gain 0.2%. Nasdaq 100 futures pointing higher by 0.3%. Global equities at a 7-month rally, of course, and the catalysts seem to be aligned for further gains. Let's flip the board and have a look cross-asset then. In terms of the Treasury markets, closed, of course, today, at least in the morning, because of a Japanese holiday. They'll reopen later today, so we'll get a gauge on what's happening in terms of US Treasuries. Euro-dollar at 1.15, the pound at 1.31 as we look ahead to the BOE, of course, and counting down to the budget at the end of this month. Brent in focus, commodities in focus this morning. Oil at $65 a barrel, up 0.6% on that decision by OPEC Plus over the weekend, as they think into the first quarter of 2026 to pause in terms of adding additional supply onto the market. Gold just above 4,000 as China cuts some of those tax incentives. We'll get more details on that shortly. Up 0.3% on the yellow metal. Let's cross over now to Winnie Su, who's standing by in Hong Kong for a check on the Asian markets. Winnie, what is standing out to you?
Morning, Tom. It seems like we are starting off in Asia quite on a positive tone this week. So we are seeing MSCI Asia ex-Japan, because Japan is on a holiday, up slightly less than 1%. And we are having a bit more gains and a bit more momentum in the afternoon session. Technology shares are leading gains here. Specifically, you see the South Korea's Kospi index up more than 2%. And the top gainer today is SK Hynix, up over 10%. Now, it is that renewed AI optimism after NVIDIA signed these new partnerships with the Korean companies. Now, flip the board. We look at another sector that's really catching eyes today, and that is the gold-related names in China, whether it's jewelries or miners, down across the board. Like you mentioned just now, we had over the weekend Chinese government saying that they have stopped the tax incentives for gold, and hence that is likely going to hurt the demand for the mass products, and especially when we're expecting the industry to raise prices for these related products. Now, overall, when we look at the Chinese market, we take a look at the next board. The broader market is also gaining a bit of a momentum here. Earlier in the morning session was a bit of a mix, but into the afternoon session, slightly in the green here, with major indexes, both offshore and offshore, gaining a bit more momentum after a big sell-off on Friday. So overall, that tone from the Trump-Xi meeting last week was quite positive. You've got a trade truce here, and also China saying that they're going to suspend some of the rare earth export controls. So that's lifting sentiment. However, on the other side, we have a bit of a weak macro picture here with the latest private survey numbers showing that China's PMI numbers are still weaker than expected, and hence a bit of a mixed picture here as investors trying to gauge the weakness in the economy and also some of the external tailwinds that we are seeing. Back to you, Tom.
Winnie Su in Hong Kong, thank you very much indeed with the check on the Asian markets. Now to the oil story then. Oil advancing a fourth day after OPEC Plus said it planned to pause output increases in the first quarter of 2026 following another modest hike for next month. The organisation said it would raise production by about 137,000 barrels a day in December, matching increases then scheduled for October and November. For more on this and the context, let's bring in Bloomberg's Bessent joining us from Abu Dhabi. Jumana, you were watching this decision closely. What stood out to you? What was the rationale for the pause that they're penciling in next year?
Yeah, that's right. So we got a bit of I would say, a hawkish surprise out of OPEC Plus this weekend. In line with market estimates, they did opt to increase supply by another 137,000 barrels a day as of December. But the surprise came with their decision to pause with extra supply in the first quarter of next year. So just taking a step back, taking some time to pause, reevaluate the market and see whether the market can actually handle extra supply coming in the first 3 months of 2026. And this is interesting, right? Because OPEC Plus so far had been committed to bringing back these extra production barrels to the market. Over the course of the summer, they announced a putback of 2.2 million barrels per day. Since then, they've announced this extra clip, 137,000 barrels a day, twice, 2 of them in a row. But now they're taking a step back, and it perhaps is a reflection of some caution coming through. And we've spoken about this in the run-up to the decision. Analysts out there are expecting quite a significant supply glut to hit as of next year. IEA have it as much as 2 million barrels a day. And so in light of that, they're probably a bit wary about wanting to put too much production back to the market. And also bear in mind that one of the members of OPEC Plus is actually Russia. And Russia had been pushing for smaller putbacks. And so it looks as though, this is an agreement that came through at a group level to perhaps be a little bit more cautious about what they will be doing next year. And if you look at the reaction today, the market has taken it well. We are seeing a bit of an uplift with the price of oil. And even some analysts out there, likes of Morgan Stanley, have actually upgraded their forecast for where they think oil is going to end up. Not necessarily because of today's decision in terms of actual production increase, but in terms of the signaling it introduces to the market, and that OPEC Plus are willing to step back if the market conditions don't allow for this oil to be steadily absorbed by the market. And so on the back of that, you are seeing some stabilization. But of course, still plenty of talk there about how on one hand you have this upcoming supply glut, and then on the other hand, there's still those geopolitical considerations to think about with the new Trump administration sanctions on those 2 Russian companies and what that could mean for Russian production.
Well, yeah, indeed. And in light of all those different factors, a question for you on the ground in Abu Dhabi for us today, Jumana, at Adipec. What is on the agenda? Are those the key kind of subjects? What is percolating through the halls there? What is top of mind for people?
Yeah, you've got to distinguish between the short term and the long term when it comes to energy. And this is an energy conference, not specifically oil, of course. And you look at some of the U.S. Big oil companies last week, energy companies, the likes of Exxon, Chevron, they're continuing with their production plans despite the lower oil price backdrop. And a lot of the conversations here are about some of the more medium and long-term drivers of energy demand. And you won't be surprised to hear this, Tom, given you spent a lot of time looking at this sector yourself, but artificial intelligence and the sheer amount of power that these hyperscalers, the data centers, are going to command in coming years where is that energy going to come from? Well, you're looking at renewable sources of energy, you're looking at low carbon solutions there, but then equally, we're just speaking to EQT, one of the biggest nat gas producers in the US. About an hour ago, we were talking to them. They said that natural gas is increasingly going to play a dominant role in powering up some of that incremental energy demand that's going to come through. So many of the discussions here are going to be about that intersection between artificial intelligence and energy, not just in terms of energy demands, but also in terms of how artificial intelligence is improving operational efficiency for many of these energy companies. We just spoke to Gecko Robotics. They're doing a lot of work with ADNOC in terms of introducing robots to help analyze data on the ground. You know, these robots get access to parts of oil infrastructure that humans don't typically get access to, feed back that information into a big data set that, again, allows ADNOC to improve their own efficiency. So there are loads of those types of discussions taking place here. Really fascinating to draw the distinction, perhaps, between the short-term outlook for oil and the long-term outlook for energy markets.
Okay, there you go. Robotics and energy. Bloomberg's Jemana Pasechi at the Adipec conference with that take as well, and the details in terms of that OPEC Plus decision. Jemana, thank you very much indeed. Let's get back to the equity story. Asian stocks are in the green this morning alongside US futures, suggesting the seven-month rally in global equities may still have room to run amid strong tech earnings, talking of tech, and easing US-China trade tensions, at least for now. For more, let's bring in Mark Cranfield, our Bloomberg MLive strategist. Mark, just talk us through then some of the catalysts for the upside that we continue to see in equities and whether or not that's likely to be sustained.
Mostly one catalyst. Jensen Huang came through Asia last week, signed loads of deals, as Winnie was talking about earlier, and his stardust is just lifting everything across Asia, particularly, I mean, Korea, the Korean markets, the Kospi index in particular, has almost become a leveraged play on the whole AI theme, and that's just running ahead of itself. Even a company, an old school company like Hyundai, has signed a deal with NVIDIA to build an AI factory which will work with the Korean government to do mobility studies as well. So wherever you look across the Korean landscape, somehow AI is playing a role. NVIDIA is closely involved. Today it's Amazon. They're also lining up a deal with SK Hynix as well, which is a stock which was already performing fantastically as well. So Korea is really at the epicenter. Japan is closed today, but there's also AI-related things going on there. We'll probably see that have a pretty strong start to the month when they reopen tomorrow. And also in the background, as we mentioned earlier, people are relieved that the situation between the US and China is on a much more even keel. They seem to have kicked the boat forward a long way. They're giving themselves up to a year to get more deals done and to talk about tariffs being pushed into the background. So great relief from that point of view. That will help, particularly as you've got Tencent and Alibaba coming up in the next couple of weeks. Their earnings will be a very big factor for the markets out here in Asia as well. So all in all, it's just a question that people can get back to thinking about the valuations in terms of AI. Is it producing what it's supposed to in terms of results? And just generally enjoying this fantastic story that Jensen Huang has really festered here across the Asian markets.
OK, the NVIDIA stardust is there. What are the potential risks ahead, Mark? We have the BOE later this week here in the UK. Markets have looked past that challenge from the Fed's Jay Powell, suggesting that December is not a lock-in. Is it central bank action? Is it data? What could derail the upside?
Certainly, you have a lot of Fed speakers coming out this week now that they've got the meeting behind them. There will be several. They don't all agree with Jerome Powell. We're likely to hear some other sides of the coin. Jerome Powell pushed back a bit on the idea that there could be a rate cut in December. That might not be the case from the rest of the speakers. We would expect 2 or 3 of them to be a little bit more excited about that. If anything, that'll be good for the equity market, the fact that the rate cut will still be on the table for December. Bank of England, very close decision. The reports are that probably the governor will have the final choice. But considering the fact that the UK budget is later this month, it will be surprising if the Bank of England want to do anything until they've seen the details of what Rachel Reeves has to offer later in the month, because that is a very big deal for the UK economy and for the direction of monetary policy. So they'll probably reserve judgment. They may well put that in their outlook, say that we're not doing anything for now, but depending on how much taxes go up and how how much there is missing in terms of the UK budget, we may want to make a stronger decision at the next one. So a lot depends on that. And then, of course, as you were talking about earlier, oil as well is back in the frame. Hasn't been a big factor for markets recently, but if oil prices continue to tick up this week, that has inflationary impact, particularly for the US Treasury market. We may see that play out later in the week as well.
OK, the linkages between oil and the Treasury market. Bloomberg MLive strategist Mark Cranford. Mark, thank you very much indeed. Here's what else to think about through the rest of this week then. On Wednesday, the Supreme Court in the US will have a hearing on Trump's tariffs. Of course, the legal challenge is there. We'll get more details then on Wednesday. Also on Wednesday, earnings from Novo Nordisk as it challenges, at least faces that competitive challenge from Eli Lilly around the obesity drug market and whether or not he continue, of course, to build out market share. The stock, of course, has been challenged year to date. And on Thursday, as Mark was mentioning, it is the BOE decision and the monetary policy report. Bets on a cut have increased, though they are in the minority. It would be a surprise, but nonetheless, given the inflation dynamics in the UK seem to be aligning slightly more closely with the BOE, there is at least a chance they could go on Thursday. Coming up, China suspends some rare earth export controls and terminates investigations targeting US chip companies. We're going to bring you the latest next. Plus, Ryanair reports a beat in second quarter profit after tax. We're going to be joined in the studio by Michael O'Leary, the Ryanair CEO, at 6:40 UK time. Stay with us for that conversation, always lively. That's coming up. This is Bloomberg. Welcome back. The White House says China is to suspend implementation of additional export controls on rare earth metals and terminate investigations targeting US companies in the semiconductor supply chain. But US Treasury Secretary Scott Bessent says that despite the deals, the US and its allies need to be wary of Beijing.
The Chinese have cornered the market, and unfortunately, at times, they prove to be unreliable partners. I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Let's bring in Bloomberg's China correspondent Min Min Lo now, joining us out of Hong Kong for the latest. Min Min, just get us up to speed on what we've been hearing then from the US and China over the last 48 hours or so, both in terms of trade and rare earths, but also Taiwan.
Yes, and you heard Scott Bessent earlier that strategic suspicion of China still remains despite some of the agreements that both sides had reached in South Korea. But the White House has put out a fact sheet of what exactly has been agreed upon. Bear in mind, this is entirely from the White House. The Chinese side has not released their version of the list of agreements. And I think markets are still waiting for a joint statement or hoping for the joint statement from both sides. But what the U.S. is saying is that China is agreeing to buy a certain amount of soybeans, 12 million metric tons to be exact for this year, and 25 million metric tons for the next 3 years. China is agreeing to take actions on fentanyl in exchange for the lowering of those tariffs. And the big win for the U.S. is those export curbs on rare earths that will be delayed for at least a year. And it's not just the actions that China has taken since October of this year. It's also the measures they have taken since April of this year and since October of 2022. It means that general licenses will now be granted for rare earths, for the likes of graphite, antimony, gallium, germanium as well. So a big win for U.S. national security. In addition, China will also end its investigation into U.S. chip companies like NVIDIA and Qualcomm. It will facilitate the resumption of shipments from the Chinese unit of Nexperia. That's the Dutch chips firm that had been seized by the Dutch government after the U.S. expanded the rules around its entity list. Now, in exchange, the U.S. is going to extend the trade truce by another year, and it's going to roll back the expansion of the rules of the entity list so that the subsidiaries of those companies are not included. What's not been agreed upon or not been talked about is Taiwan and Ukraine. But we spoke to David Lee Rao-Kwe, a former PBOC advisor this morning, and he was quite optimistic that there will be at some point over the next 12 months a broader discussion of these longer standing issues, especially given that the tone from this meeting, it seems like the U.S. has been treating China as an equal partner, President Trump describing it as a G2 event, and I think the Chinese leadership has been taking that as a very positive sign.
OK, Bloomberg's China correspondent Min Min Lo, thank you. With that update, of course. Coming up, we're going to be discussing how Italy, meanwhile, is leading the way in Europe's efforts to build energy resilience through battery storage. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday, everyone. Global energy storage is expected to surge over the next few years as economies balance intermittent power from renewables like solar and wind with rising demand. And as part of Italy's push to integrate more renewable energy into its grid, it's awarded all battery storage in Europe's largest storage auction to date. There's some significance to this beyond Italy as well. Let's bring in Sofia Pirelli Rocco of Bloomberg NEF's European research team to join us with the details in terms of the auction and the wider implications. Talk to us about the importance then, Sofia, good morning, of these battery projects and Italy's role as well.
So renewables don't always produce power when it's most needed, but batteries can help by charging when there is excess solar and wind supply and discharging back into the grid when power demand and power prices are also highest. And to roll out these batteries, the Italian government has put this 17 billion euro Maxi scheme, which hands out 15-year long-term contracts, which guarantee stable revenues to these project developers. And these contracts are awarded to the cheapest battery projects bidding in an auction. The first auction happened on September 30th, and it was a massive success with 4 times oversubscription, meaning that there is massive interest in industry interest. OK, so there's huge interest. Who came out as the winners? And talk to us about the pricing as well and whether or not these companies, how these companies can make money if prices are low enough to, of course, to meet the aspirations of the Italian government. So winning bids came at around 13,000 euro per megawatt hour per year, and that's extremely low. It's 67% below the maximum ceiling price for the auction, and that really shocked industry. In terms of the biggest winner, that was Enel, who took over half of the awarded capacity, and part of its success was because it had already existing grid connections, which allowed it to bid even lower. But overall, the story is that battery prices are really declining really fast. And one of the reasons for that is because there is Chinese battery oversupply, but as well as Trump's tariff, which have meant that these battery technology producers have been starting to look at Europe, where competition is increasing and battery projects costs are declining very fast.
And very briefly, really interesting, what do these results mean more broadly in terms of Europe's energy transition?
So Italy's auction was a massive success because by de-risking revenues for projects, it allowed to get many cheap batteries on the ground. And potentially, as other governments look to implement more batteries, other governments might start doing a similar approach and taking on these long-term storage auctions.
Sophia, fantastic. Thank you very much indeed. Really important story with the details and Italy's role in that when it comes to battery storage, but more broadly for Europe's energy transition. Sofia Pirelli Rocco, analyst from BNF's European research team. Thank you very much indeed. Coming up, supercomputers in focus with the CEO of IQM. That's coming up. Stay with us. This is Bloomberg. Good Monday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Oil gains for a fourth day after OPEC Plus agrees to hold off on hiking output from January. This as the producer group faces the prospect of ballooning oversupply. The White House says China will suspend some rare earth curbs and halt probes into US chip firms as trade tensions continue to ease. Plus, Ryanair reporting a beat in second quarter profit after tax. We're going to be joined in the studio by Michael O'Leary, the Ryanair CEO, shortly. Let's get to the markets then. Earnings have certainly been a catalyst. You have seen a 7-month rally for global equities, and the futures picture suggests that will continue in the session today. European stocks then, after dropping on Friday by around 0.5%, looking to add about a tenth today. So pairing some of those losses, FTSE 100 futures looking to add 14 points. S&P E-minis just up by shy of 0.1%. And Nasdaq 100 futures up 37 points with that AI momentum trade still firmly intact on the back of those earnings. Let's flip the board and have a look cross assets. Japan closed, so we have no US Treasuries trading, at least currently. They will, of course, start trading in the US session later today. Euro-dollar at 1.15, largely unchanged on the single currency. The pound at 1.31. We are hearing, of course, that Rachel Reeves is planning potential additional levies on high-valued homes, potentially changes there as well, and potential tax hit to those wealthy looking to depart the UK. Brent at $65.20, up 0.7% on the back of that OPEC Plus decision to pause additional output in the early part of next year. Gold just above $4,000 per troy ounce, up 0.3%. China scrapping some tax incentives when it comes to the retail space there. So a check on the markets, but broadly the picture on European equities is modestly positive. Now, as the race to build and supply AI to the world heats up rapidly, and certainly AI is part of that upside coming through for global stocks, one European supercomputer firm is making a growing impression on the tech market. IQM has announced a collaboration to integrate NVIDIA systems into its computers, as it also raised over $300 million in a Series B fundraiser, one of the largest when it comes to quantum computing globally. We can now bring in Jan Goetz, the co-CEO and co-founder of IQM Quantum Computers. Jan, thank you very much for your time. So the momentum is there for you and the team. Let's start with the NVIDIA partnership, and then we can talk about the funding and the priorities. How significant is that partnership with the company, Jensen Huang and team, and what that means for you and the business going forward?
Yeah, thank you. This is a very significant partnership for us, as quantum computing holds the potential to solve problems that you cannot solve with any big supercomputer. But for this to work, actually, we need to integrate our quantum computers with GPUs and CPUs. And this is exactly what we are doing in this NVIDIA partnership. We are bringing our hardware closer together so that they can work hand in hand, quantum computers and graphical processing units working together to solve the world's hardest problems.
And you've raised about $600 million in total. You have the partnership with NVIDIA. You've raised the capital. How central is the US market to allocating that funding, Jan, in terms of the potential scale of that market?
Yeah, the US market is super important for us. From a business perspective, we either sell computers to data centers or we sell computing time through the cloud. And in both those segments, actually, the US market has a leading position. So for us coming from Europe, we see this actually as a major growth opportunity. Having started here, we are now developing strongly our business in the US market. And for this, the partnership with NVIDIA and other partnerships we're having are actually very important.
In terms of go-to-market in the US, Jan, how do you differentiate IQM from the giants of IBM, Google, and others there? What makes you stand out? How do you make that pitch, given the developments that both of those key companies have come through when it comes to quantum computing?
When it comes to quantum computing, we are the global leader for on-premise sales of quantum computers. So we have sold and delivered most quantum computers globally as on-premise devices into big data centers. And this is really what makes us special. We have put a lot of effort on our product, having best-in-class quantum computers that perform from a quality perspective and reliability perspective much better than any other machine. And this is really what brings the customer into a position where they can solve problems that they could not with any other computers. And from this perspective, we have a very good standing even in the US market.
And I know you sell and deploy both the hardware and software into research labs, into universities, and at the enterprise level. Where is the enterprise demand coming from at this point, Jan?
Quantum computing has the potential to disrupt any industry. You start in the chemical, pharmaceutical industries, but also finance, logistics, supply chains, these kind of things. And this means all of those companies, they need to get ready for quantum computing. They have seen now in the AI part how fast it can go and how fast the train can arrive, and they don't want to be late for the quantum train. And this is why they're all getting started now to build up the know-how, build up team, and integrate quantum computing processes into their workflows. So we are actually seeing an increasing demand of corporate customers using our quantum computers. And this actually goes also particularly well through our cloud offering.
When do we get to the point? Is this the year? Is it next year? Is it beyond then when we go from quantum as a research project, they're being tested, there are pilot projects at enterprise level, to real scalable commercial use?
Yeah, it's not going to be that black and white that we have a certain year where suddenly everything works, but it's a steady process. Similar to semiconductor industries, where we've had Moore's law active for decades, we expect that in quantum computing, we see a steady progress. And I think if you observe the industry, we are reaching our milestones. And this means that actually every year we are bringing out more powerful quantum computers. And we do expect the first commercial use cases in the next couple of years. But this is just the beginning. And we will start probably seeing use cases in quantum chemistry, so simulating better materials or maybe pharmaceuticals. But then actually, as the computers get more and more powerful, we will unlock use case by use case over time.
What are the biggest technical hurdles to some of those goals at this point then?
We still need to scale the hardware. So we know algorithms, we know what needs to be done, but the processors are today not yet powerful enough. So this means we need to have bigger quantum processors and we need to have higher quality in those. And this is exactly where we are investing in heavily with IQM. So you mentioned our Series B fundraise, and a lot of this actually will go into expanding our chip fabrication facility. We will invest more into error correction technology, which is super important for quantum computers to work, but also the software stack and developing a software development kit so that more and more users can actually use quantum computing without maybe having a quantum background or a quantum PhD. So make it much more easier to adopt the technology.
Where does Europe stand in the quantum race, before we let you go, versus the US and China, Jan?
Yeah, I think it's a race and it's a long shot, so it's a marathon. And I think Europe has a very good starting position, given that the whole technology comes out of the research labs. And we do have quite a lot of very strong research labs in Europe. What we need to do now is to scale the technology. And this has been a challenge for Europe in the past in other technologies. But I do believe that we have an actual chance to do it right this time in quantum. We do see a lot of support from the governments. We actually see no new growth funds coming up, particularly for deep tech and quantum. So from this perspective, I don't think there is a clear leader at this moment, and it's going to be a long journey there. And we do have a very good chance, I think, also out of Europe to be a global leader in this technology.
OK, Jan, we appreciate your time. And congratulations on the partnership and the raise, of course, most recently. Jan Goetz, co-CEO and co-founder of IQM Quantum Computers, joining us out of Finland. Thank you. Now, to some of the stories making the news this Monday. Bloomberg learning that Pony AI is set to raise $863 million in its Hong Kong listing. That's US dollars. Sources say the robo-taxi firm's listing has attracted ride-hailing giant Uber, which is in talks to invest about $100 million in the share sale. Proceeds from the listing will fund large-scale rollout of its level 4 self-driving tech, in addition to further research and development. And Berkshire Hathaway's cash pile surged to a record $382 billion in the latest quarter, as earnings jumped at Warren Buffett's conglomerate. The firm's cash hoard grew as Buffett avoided deals during the quarter. Insurance underwriting profit more than tripled. Berkshire also declined to buy back shares for a 5th straight quarter. Coming up, Ryanair says it expects to exceed its passenger growth target for the full year. CEO Michael O'Leary joins me to discuss the airline's latest earnings. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Ryanair says it expects to exceed its passenger growth target for the full year, with travel remaining strong. This, of course, is Europe's biggest budget carrier, reported a beat on second quarter profit after tax. Joining me on set, Ryanair CEO Michael O'Leary. Michael, always great to get your time at the back of the earnings. A strong sector of numbers for Ryanair. What underpinned the strength? The summer season clearly key when it comes to this most recent quarter. Do the trends continue into the next quarter?
Yeah, I think like the overriding trend, Tom, in Europe, I think this year and for the next 5 years is going to be capacity constraint. The manufacturers are way behind on their deliveries. In fact, Boeing left us 29 aircraft short this summer. We're the airline that adds more capacity in Europe than any other airline. So if we're short capacity, we were only able to grow traffic 2% in the September quarter. But we were able to recover all of our last year fares went down by 7%. This year they've gone back up by 7%. So we've recovered last year's fare decline. Kept costs under control. Unit costs are only up 1%. And profits as a result are up 20% to 1.72 billion in the second quarter.
What do fares look like guiding into the current quarter?
They look strong. I mean, we're moving into the winter period now, so we cut capacity, but forward bookings are about a percentage ahead of where they were this time last year. And, it looks we're growing increasingly confident that we will hold on to or recover fully that last year's 7% fare decline, that will continue through the year. Although the second half comps are a bit tougher because last year we saw a fair recovery into the second half. But we're pretty confident now that we will recover fully last year's 7% decline.
OK, and on passenger numbers, so you're forecasting there's an increase from 206 million to 207 million. Is that you and the team being conservative, Michael?
No, it's actually, it reflects the fact that Boeing are doing a remarkable job over recent months of delivering us aircraft. Now, they asked us to take aircraft in August, September, October, which is is the wrong time of the year for deliveries because we can't use them. But we said we'll take them just so we secure them for summer 2026. So we have taken 23 of the 29 aircraft they left us short in the last 3 months. There's 2 more coming in November, and then the last 4 arrive in January, February next year. So we are confident now we have all 29 of those aircraft delivered well in advance of summer 26. So next year we'll grow from 207 million this year to 215, 216 million passengers next summer. 215,
216, and that is you're fully confident you get the full 29 by February of next year from Boeing.
Yeah. And the aircraft they're delivering now, much better quality. We're finding no defects in any of the aircraft. I think Kelly Ortenberg, Stephanie Pope doing a really good job. I think Boeing are really getting their act together.
And you've guided on a reasonable, you haven't given a specific number when it comes to guidance, but you've guided on reasonable profit growth.
Yeah, I think so.
What does reasonable profit growth look like?
I mean, look, if traffic is up 7%, in the first half of the year, our traffic is up, profits are up 40%, but that's distorted because we had a weak prior year comp in Easter, only half of Easter was in. So it's difficult to put a number on because it's so heavily dependent on the close-in bookings through Christmas and the New Year period. And then into the spring. So we're not willing to put a number on it now, other than to say, look, traffic, we're growing faster than we thought we would. It'll be 207 million. That's about 3% traffic growth. Profit, we think there'll be a reasonable profit recovery, but I'm not going to put a number on it.
And the winter number, you've said 1% increase over that, or the current quarter, 1% increase on the same quarter last year. Is that right? 1% increase?
No,
in the current quarter? What are you looking at then for the winter season in terms of booking numbers?
Also, in terms of we expect that traffic will continue to. There's a reasonable prospect now we're going to grow 3, maybe we might get to 4%. It's from 200 to 207 million now, so we've got 3.5% growth for the full year.
The MAX 10 certification, we've got a time frame now, mid-2026. How confident are you, particularly given the government shutdown in the US?
I mean, the government shutdown will be over well before that. I mean, Boeing say they're making very good progress. We've heard that back from the European agencies as well. EASA are saying that, it looks in good shape. The critical thing, as long as it gets certified, the MAX 7, MAX 10 in the middle of 2026, our first deliveries aren't until the spring of 27. And Boeing have written to us confirming that they'll meet those delivery dates. So we're pretty confident now that we'll get our first 15 MAX 10s in the spring of 2027.
And if that time frame slips, what does that mean for growth brands?
It just means our growth will slip a little bit. But I think I'd be more optimistic now. I think we'll be bringing it forward a little bit. I think we'll do 215, 216 million passengers in summer 26, which is FY March 27. And then we start into an order book of 300 MAX 10s out to 2034 that will see us grow traffic from 200 million, 207 million this year to over 300 million passengers. So we're at the dawn of a very exciting growth period for Ryanair. The good news as well this morning is we've hedged fuel out into next year. So we were able to jump on some of the recent fuel weakness. This year we're hedged to March 26 at $76 a barrel. This morning we've announced we're now 80% hedged to March 27, but at just under $67 a barrel. So about a 10% saving on our fuel costs next year. We bank that. It means we can offer our passengers lower fares and really accelerate growth with the 29 new aircraft we now have from Boeing.
OK, and at a time when OPEC Plus has said that it's going to be putting less oil on the market in early next year, with prices slightly picking up in the session today.
Yeah.
You've been cutting routes in Germany and Spain, adding new routes to Sweden and Hungary.
Yeah.
Is there ability for Sweden, Hungary and other nations outside of the core markets like Germany and Spain to absorb more of those routes?
No
does
question.
that continue?
I mean, look, the trend across Europe, Tom, is you have a consolidation going on between the legacies. So Lufthansa has bought what was Alitalia. Lufthansa, Air France, IAG are all queuing up to buy TAP. They're all cutting capacity. And there's a real, if you like, schizophrenia in Europe. You have most of the growth economies, Sweden, Croatia, Hungary, Italy, have worked out are abolishing their environmental taxes on air travel because they're, if you like, a break on growth, and they're being rewarded with dramatic growth. We're switching capacity to those countries. The three countries who don't get it are the dumb Germans, the stupid French, and Rachel Reeves, who, got elected a year ago here in the UK on a campaign to deliver growth. We wrote her, said, congratulations, abolish APD, if not across the UK, at least outside of London, abolish the APD in regional UK, and we will give you 50% traffic growth in 5 years. What does she do? She puts it up by £2. I mean, she hasn't a rashers how to deliver growth. She puts up employment taxes, puts up APD. APD is going up in the UK by £2. Mm-hmm. We wrote to the Treasury and said, this is the dumbest idea even you lot have come up with. I got back a stupid letter from a Treasury Minister saying, a £2 increase in APD is only a 1% increase on average fares. Clearly, the Treasury are paying average fares of £200 for their air travel. They must all be travelling with BA. Our average fare is £45. APD in April will go to £14, a 33% rate of tax.
We're talking about air passenger duty.
Air passenger duty. And they are killing the region. So all of the airlines here in the UK have said, if you put up APD, we will switch capacity out of regional UK, Glasgow, Edinburgh, Manchester, Birmingham, airports that are not full, and they'll move to those countries like Sweden, like Italy, like Hungary, like Albania, where they're abolishing environmental taxes.
So I guess the Chancellor would say, look, we need to raise taxes from somewhere. The airline sector, Ryanair, is doing very well. We've seen that in the results today. If she raises again the budget November the 26th, if she targets airlines again with increases in duty, what does that mean?
More capacity, more flights, more aircraft, and more jobs will move from the UK.
What specifically would you do?
Oh, specifically, we'll take about 10% of our capacity, and we're the largest airline in the UK. We'll switch about 10% of our capacity, about 5 million seats, out of the UK into those countries, Sweden, Italy, reward those countries who are abolishing environmental taxes. And eventually, even a dumb Labour government will work out that for an island on the periphery of Europe, the way to grow and the way to increase tax revenue is to get tourists onto the island first and then tax them with VAT, hotel taxes, whatever it is. But the way to grow is not by increasing the entry taxes, which is what APD is. This is the dumbest government. I mean, you've had some dumb governments here in the UK, Brexit being the most spectacular economic own goal of the last 10 or 15 years. So it's not like the Tories were anything to write home about. But Labour should have come in here with a growth policy, abolish APD. Maybe not in London, because the London airports are full. But there is enormous growth available in those red wall seats in regional UK. Abolish APD.
I'm sure the Chancellor would make the point she's giving in terms of regulatory approval for airport and runway growth. That's coming through. And the fact that they had to... I'm sure the Chancellor would also say that they have to repair the fiscal damage that they would claim the Conservative government inflicted on this economy over 12 years. And that the options for this current government are limited within the fiscal constraints, of course, that they face. I'm sure that would be part of the pushback from the UK Chancellor.
They were her fiscal constraints. 2, she got elected on a programme to deliver growth, that the way out of this was to grow.
I'm sure she would also point out that the UK is growing faster than most other OECD.
It's actually growing slower than most OECD countries at the moment, and it will grow probably grow even slower when she raises taxes on employment and on air travel yet again. You cannot be an island on the periphery of Europe and decide that the way forward here is tax people coming to the UK, because they'll just go to Europe instead. There is a way forward here. Abolish APD, certainly on the airports outside of London, and you will be rewarded with dramatic growth, which will be self-financing, because the spend of those tourists in VAT, hotel nights, etc., will pay for itself.
Let's see if the Chancellor is listening. Michael O'Leary, CEO of Ryanair. Thank you very much.
Pleasure as always.
Always appreciate it. And as we were just discussing, UK assets are in focus as Chancellor Rachel Reeves weighs new taxes then on the wealthy as well to plug a budget gap of as much as £35 billion. Bloomberg understands options include an exit charge for rich Britons and higher levies on luxury homes, moves that could reshape property and capital flows. Treasury officials are said to have drawn up dozens of tax options for the Chancellor to consider. Plenty more coming up. This is Bloomberg.
Credit quality is excellent in our book, and that doesn't mean no defaults. Everyone's going to have defaults now and then. We said multi-trillion-dollar industry. That's okay. You just can't have many, and you have to get good recoveries, and that's exactly what we do at Blue Owl. And by the way, so do our peers, and so do the banks. So the system is in a strong place.
OK, that was the Blue Owl Capital co-CEO speaking to Bloomberg on the credit space. Continued focus and scrutiny there, of course. Let's zoom out, though, and have a look at what's happening in terms of the sovereign debt of the UK, because October was a particularly and surprisingly strong month in terms of gilts and performance, gains of 3%. Part of the factors seem to be inflation becoming a little bit better behaved, expectations that maybe Rachel Reeves, you heard Michael O'Leary lambasting the Chancellor there, Rachel Reeves possibly expectations she'll take a strong line in terms of fiscal control around the budget November the 26th. So you have the likes of Jefferies and Aberdeen and JP Morgan Asset Management saying there are more gains to be coming in terms of the gilt market. It's worth noting in terms of yields for UK sovereign debt, still amongst the highest within the G7, but that gap has been narrowing. Let's flip the board and have a look at the corporate giant, of course, of the moment of the year, of the last 24 months, Nvidia, $5 trillion. But here's where it sits in terms of its market weight across various different indexes across the world, accounting for 6% of the MSCI World Index. Across the S&P 500, 8.5%. It's hard to find another example in history of a company with that kind of weighting on the S&P 500. Across the Nasdaq 100 at 10.2%. Again, all of this in the context of a rally that just added 9% just last week alone. Of course, $2 trillion in market cap added last year, $1.7 trillion added so far this year, with a market cap of upwards of $5 trillion right now. So just the significance of Nvidia across these major indexes globally. Now to access, search and save all of the Bloomberg Terminal charts used on this show and across Bloomberg TV, Terminal subscribers can now use the brand new function, Chart TV Go. The opening trade, though, is up next. This is Bloomberg.